Hi, and welcome to this week's episode of Global News of the Money with Club. And basically, can you guys see me? Okay, I think we're back. Hi, my name is Ola, and I'm the founder of the Money with Club. And basically, what we do is that we um, talk about global news and how it affects your pocket. And basically, this week, reviewing very interesting things that are happening around the world. And I welcome you to join the conversation. Of course, if you're joining us for the first time, more about us. We are the Money with Club. This session is powered by the Money with Club, and what we do in the Money with Club is provide financial education and access to investment opportunities. So apart from guiding you on the regular investment, like the traditional investment stocks, bonds, and stuff, on an investment, not a trading capacity, right? Because we're doing thinking long term. What we also do is that we bring deals that you will not see, right? Or help you analyze deals that you find and help you decide on whether you should go on with it, do the due diligence, all that. So that's what we do in the club. Now, so let's talk about today's or this week's news, things that have been happening in the market. For some reason, my tech is not taking right now. So you can't see the all the things that should be scrolling across, and we're just stuck on one thing. However, on the global scale, one thing that was very, very interesting news this week was that the U.S. Department of Justice is considering getting Google. The parent company's name is Alphabet, but Google is what we know. Getting Google to divest some of the subsidiary. Basically, they are saying they are basically too big. They are. There's something in the U.S. or in developed countries. One company should not be. You shouldn't have a monopoly in any sector. So the moment you are too big and you are seen as a monopoly, you're required to do something about it. So what they are saying, there are two considerations. One is that Google should divest some of its subsidiaries, or they should share their data, because where Google has its power is in the data that they have built over the years from their different platforms. And they're saying they should sell the data. So we want to unpack it. So, and then, I mean, for us, we are observing and we are saying, as investors, what should we be doing when we see this news? So there are two parts, and that's how we analyze things. We don't say this is what is going to happen. We're going to say what happens if they go this route, what happens if they go the other route. So one route is that they divest. What does that mean for everyone? It just means that will have to sell some of. Now in selling some of those companies, what will happen is that they would sell and get money. So they would either, the money that they get, they would either, what's it called, they would either um send it to, give it to their shareholders, or do invest it, but somehow the other money is going to come in, so do we have excess cash? I can see people are messaging and saying hi, I believe, but my tech is hanging, I can't do anything tech wise. We just need to keep moving. But yeah, so they would, so Google has two options. If they, no, not that you have to, they're giving, there are two considerations right now. We are saying what will happen if this one happens. So as a Google investor, if they have to divest, what will happen is that Google will cherry pick the ones that they have the best competitive advantage on and hold on to those ones and let go of the others. But for the investor, what will happen is that in selling those companies, in divesting those companies, cash is coming in. And what will also happen is that some of those companies that have been hidden in the pack of how big Google is, you would end up unlocking some value there. In those places also, another thing that you would find is that, you know, that Google Maps connecting to Gmail, connecting to everything, that interconnect activity that you are enjoying in the Google might not get it, right? Or there might be some blips, or they might have to renegotiate arm's length conversations, right? On those kind of things. But fundamentally, as a shareholder, I believe that it might not be as bad, because they would choose where they have the competitive advantage and they will hold on to it. The other option is that Google might be forced to share their data with other providers. So Google might be forced to make their data open source, sort of, right? And I think that is the major one. Because if we know Google's competitive advantage is data. Google's competitive advantage is that they have so much data that they are able to somewhat in a very fine-tuned, refined way know who we should be selling what to per time, know who to share these ads with. Those this data that is data driven, and they have so many data points from YouTube, seeing what you like to watch, to Google Maps, see the kind of places you search for. So they have many data points, right? If they have to share that data with the world, it's going to be major. In my own personal opinion, I think more of that will have more of a negative impact on Google than them having to divest. In my own opinion, I mean, and I would love to hear. Unfortunately, my tech is not taking today, so I can't. I can see that people, for some reason, I can't do anything. But I would really love to hear. I mean, type in the comments and we can see those things and talk about them later. Which one do you think is better? Because for me, it is data that makes Google Google. The moment Google has to share that data with everyone, yes, on one hand, right? All these tools will be more refined once they plug in Google and Google's database for all. But then at that same point, it takes away what makes Google what it is, right? And I mean, the bigger picture is that if they're able to pull any of these options up off with Google, then none of the big techs are absorbed like body. Microsoft have that large ecosystem that is working for them in their space, right? So this is really major. And beyond just Google, it represents what the future holds for tech that we all see, right? And believe that they are the future, if you get what I mean. These kind of laws can change the game significantly, like significantly. Or this kind of judgments, rather, not laws, can change the game significantly. Why? Because once the judgment comes out for something, then it sort of sets a precedence for all of such cases, right? So it is actually major. That's one. Then on the second hand, I mean, we've talked about US Feds. I mean, if you are just watching for the first time, please go and watch past videos. Yeah, you will learn a lot and share with your friends also. I really do recommend, because it's important to be aware. One major thing that's happened last month is that cutting rates. And we see that what will happen is that over time, we will see that rates globally will start coming down for the countries that at least can afford to, right? And we'll talk about what that means later. So the European markets close lower. And I mean, Fed cut rates. We can watch videos. Yeah, we can understand what that means. But what we found last week was that the European markets, the stock markets in different countries, Germany and co, because the US inflation data came out higher, right? So the market sold. Now, why am I highlighting this? Is because a lot of people feel like the stock market is a random walk. The stock market is a random walk to the extent that life in itself is a random walk and is totally unpredictable. Yes. However, the same way, as much as we know that life is same way, the stock market is a random walk because life can still life. There's still a logic to it. There's still a reason why people do what they do. So that when you see, if you follow the European stock market and then you see that the stock prices are coming down, you'll be like, but they cut rates. Why are they doing this? Why? Because there's data that they are tracking. There's data that is driving decision, right? And then what happens is that yes, the Feds have cut rates and European Central Bank has cut, Bank of Canada has cut, and it's going to be that cycle. But the fact is, it's not just going to be um let's use numbers, 30 to 20 to 10 to 0. No, it's going to be 30 to 21, back to 28, then to 25, then to cross 19, go back to 23. That's how the market will happen. That's how that drop in rates will happen. Why? Because as even though there's a general trend, there'll be different news that will make the market go up and down. For example, this inflation news, why would they respond by selling? Because one of the things that the US Fed is considering, right, in making their decision to continue to cut rates, which will affect the whole world, right? Is inflation. Now, if as they begin to cut rates, inflation begins to go up significantly, then they would slow down. They might not take rates back up, but they will slow down. Such that if you have traded based on the fact that you're expecting 50.5%, I don't want to use the technical term, but 0.5% rate cut, and then you now realize that, oh, they're not doing anything at all, what would you do? You quickly sell what you bought with that in expectation. I hope you understand what I mean. Like, one don't work entirely. Whilst we can't predict things, but there are data points that people are looking at to actually make informed decisions. And it's important to follow this channel. Yeah, if you haven't, please subscribe. If you haven't, think of one friend that you can share with and share this video with them. Be a good friend. Why? Because it's important to make informed decisions. You are in an environment, you are not in isolation. So you can't say, I like this stock, I buy. And you see that things are changing, but you're not aware of it. That's why this is important. Now, coming down to Africa, I'll somewhat do Africa and Nigeria together. Why? Because the news sort of dovetails into each other. And like I said, I can't pop up anything that would ordinarily have popped up. Why? Because there's tech issues today. um, but yeah, for Africa, Bank of Uganda cut key lending rate. Bank of South Africa to this South African Central Bank did the same. The Ghanaian Central Bank also did the same. However, Nigerian Central Bank took their rates up. And a fallout fundamentally from the US rate cuts is that everybody will begin down on high interest rates that they have had to do in the past, right? It's a trend. Now the question is, when everybody's going in a certain direction and there's an outlier, you have to ask, why is this outlier still keeping their rates up? It is very important. Do not ignore. Why? Because there's a reason why I can borrow at 5%, but I say me, I'm going to borrow at 7. What is that telling you? The question you ask is why? Because if money is cheaper, why do you want to pay more? You can't be nice. There must be a reason, right? So we are seeing a trend in Africa, and that trend is a fallout from the United States. As long as US Fed keeps cutting rates, right, you would see that slowly and surely other countries, you've seen it in Europe, you've seen it in Canada, just begin to. But when you see that person that is jumping out and saying, nah, everybody's cutting rates, but I'm taking my rates up, you have to ask questions, right? And this dovetails into the Nigerian news. The first news I want to highlight in Nigeria is that capital importation numbers dropped. Right? The data we have is that, okay, capital importation numbers dropped. Now, what is capital importation? Capital importation is how much capital comes into your country. Like, how much capital are people bringing into your country? Now, remember, it's from outside, so it can be in your currency, right? That's the first thing. So when they say capital importation numbers dropped, it's saying how attractive were you to outsiders for them to bring in money into your country, for them to bring in foreign currency. And because in Nigeria, the major foreign currency we trade is the dollar, right? So how much dollar were you able to bring into your country? And the people that brought in USD, what did they bring it in for? Now, this is one of the key pointers that will tell you why your exchange rate is the way it is and what is going to be happening to your exchange rate in the future. Now, what do people bring in money for? They either bring in money for their family, send money, yeah, or they bring in money to invest in actual brick and mortar long-term businesses, or they bring in money for portfolio investments, stocks, bonds, blah, blah, blah. But what we found was that the major attraction was portfolio investments, even though it dropped generally, but portfolio investments, which is logical because remember, we are taking rates up. So we are trying to keep ourselves more attractive. And in that way, people are saying, okay, this is attractive compared to others. However, it took attractive. Nigeria is not as attractive as it should be. So for you to improve your capital importation numbers, you have to be attractive to international investors, meaning that your the companies, the forecast for your businesses, the opportunities that they see need to be good enough to say, let's send money to Nigeria. On a general note, because the feds, right, are cutting rates, what is going to happen over time is that the countries that are positioned well, they would end up getting extra external funds. Their capital importation numbers are going to go up, right? And we begin, and when those things begin to happen, I'll highlight them here. But what's going to happen is that those countries that are well positioned, developing countries, they will begin to get better capital importation numbers. But for Nigeria, this just reflects the fact that there are a lot of things, ease of doing business, a lot of those things need work, a lot of work, I dare say, but we need to rejig our international attractiveness. And it's not about roadshows, it's about the actual data, the actual ease of doing business, the actual efficiency of production, the actual power cost, the actual availability of power, those things that we do not think matter as much, security, logistics, those are the things that feed into that capital importation number. And most importantly, that capital importation number gives you a clue on where your exchange rate is going. So if your capital importation is dropping or you are getting less and less, it will show you your exchange rate. Yeah. Yeah, yeah, yeah. But what we might find, I mean, not to end on a negative note, is that we're getting towards Christmas and then there's going to be a lot of people bringing in cash. So there might be at least that stability at that time, hopefully. But on this note, welcome you to join the Money Week Club. I can't see anything on the screen. So themoneyweek.com is the link to we have a Substack email newsletter. It's at the Money with right on Substack. Sorry, I can't post anything, but I am really happy to have this session with you guys. See you next week, 9 a.m. GMT plus 1 every Saturday. Don't forget to share with a friend. Don't forget to subscribe, hit the notification button so we know when next we're live. And I forget to mention, I'm resuming my regular weekly education content on YouTube. If you have any topics you would like me to explain, if you have questions, personal finance, investing, and the economy, please drop in the comments, whether you're seeing it on YouTube, on Facebook, and on LinkedIn, drop in the comments. I'll be sure to see it, and I'm building my content base, and we will be connecting soon. Take care, everybody. Bye-bye.